Forget the headlines about wage hikes. The $1.2 billion Ford Canada just committed to its electric vehicle transition isn't just a big number, it's a strategic bet on Canadian manufacturing capacity, and it just made TSX auto suppliers a lot more interesting. The implications for domestic production and related industries are far more significant than short-term labor costs. InvestIQ. Let's get into it. Today, while the TSX shed 0.86% and the big banks like RY and TD dipped over 2%, the real story brewing is in the auto sector, specifically north of the border. Unifor's deal with Ford Canada isn't just about salaries, it signals Ford's deep, long-term commitment to Canadian EV production. This $1.2 billion investment, largely overlooked by a market focused on the immediate, means a sustained demand for Canadian-made components and expertise. For the regular investor, this is where the opportunity lies. Instead of just looking at Ford, which is down 2.96% today in the US, consider the ripple effect. Local suppliers, the unsung heroes of the auto industry, are now poised for outsized gains as this EV ramp-up takes hold. Think parts manufacturers, battery component suppliers, and even logistics companies operating in Canada. This isn't just a Ford story, it's a Canadian manufacturing renaissance in the making, and it could drive significant growth for ancillary businesses. While meme stocks like AMC popped 26% and crypto showed a slight gain, the quiet long-term play here is in the industrial backbone being reinforced. Look for companies like KEEL.TO, which jumped 10.51% today, as potential bellwethers for this broader trend. That's your InvestIQ Market Read. This is analysis, not financial advice.